Here we go, stocks by the numbers, and let's do an update on SMCI, Supermicrocomputer here on the NASDAQ. Stock had a great day today, closed up almost 11% after hours. I guess we can call it 11%. It's still going. Closed at 40.84, up almost $4 today. And you can see after hours at about 41 and a quarter, up about another 1%. And again, this is why I love my trend lines. Look at that, comes right down to the trend line, quickly breaks, tests the fib right there. Low 34.51, fib 34.51, beautiful bounce, retest, bang, 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 right there off of our trend line. And then boom, we get the big pop today. And what was the news? Let's find out. Company partners with Eviden to expand distribution of AI superclusters. A unit information technology firm, Atos Group, collaborates with SMCI to distribute company's AI supercluster with NVIDIA GB200 NVL72 products across Europe, India, Middle East, and South America. Evident to offer NVIDIA GB200 NVL72 product as part of broader infrastructure services. Collaborating with Evident enables us to greatly expand our presence in Europe. On Monday, Rosenblatt reinitiated coverage on SMCI with a buy rating and a $60 price target right out of the gate. And I'm saying again, in my opinion, that's conservative. I mean, if you really think about it, again, that's conservative. Even if you want to say, all right, it hit those highs of, whatever, $124. Even if you want to say, well, you know, it was trending, we broke it up. It got listed on the S&P, you know, it was hyped up a little bit. It was hyped up. All right, fair enough. But, you know, even if we take 20, 25% off that high, I mean, we're talking about like $90 a share. And obviously stock's down here at 40, so you know how I feel about it. But also I say that here, again, the stock's hanging out in the 30s and the 40s. So they probably can't look too out of their mind, right? They can't look too crazy with their price target. So no one's going to come out like myself and say $200+ a share. I still stand by that price target, by the way. But they're not going to come out and say that. You know what I mean? If it's 30 and 40, they'll say 50, 60. If it runs up all of a sudden, maybe over the couple of months, and now it's at $58 a share, they'll up it to, you know, $68, $72, right? They'll keep it in line with the stock price. But in my opinion, the stock price is going to continuously keep climbing, so those price targets will definitely continue to change and should increase, in my opinion. Out of 14 analysts, 5 rated a buy, 7 give it a hold, 2 give it a sell. Okay, what's this? Trump slump. Talking about tariffs. Tesla. People obsessed with Tesla. Elon Musk getting too much attention for everybody. They're getting upset. No, but I wanted to... Yeah, there wasn't really any breakdown or analysis here, but you can see this was technically yesterday, but price target announced $60 a share by Rosenblatt. So that's what I mean. They can try to not kind of overextend themselves, but in general, in my opinion, I mean, it's really unfortunate what this company went through, because again, it should be like here, and which means these price targets should be like here. So only time will tell, though. I know people still worried about the DOJ investigation, so hopefully nothing too crazy comes out of that. But again, as we see, we continuously, you know, extend contracts with our clients and get orders. So that's why we saw the demand was there, and we saw the company bump up their guidance by, you know, 100% year over year. Now they're looking for what, 40 billion for 2026, maybe like 26, 28 billion for this year. I mean, that growth is just astronomical. So that's why, you know, some people may shy away. Not everyone may jump into this situation because of, you know, the bad taste in their mouth, maybe from back here potentially. But over time, just like when it happened the last time we spoke about back in 2018, when they got delisted, but they just continued to keep growing, continued to do business, and boom, then they got relisted and stock just kept growing, and you know what I mean? So if the demand is there and if the revenue is slated to come in, then the growth is probably going to be there over time. You can see, though, we had this really nice healthy bounce, and we're kind of potentially in like this upward channel here. Let me show you. If we like go across the tops, right? Let me take off the extend. But you can see, right, we're kind of in like this upward channel. So we had these big drops, and now we're in this upward channel. And sometimes, you know, usually the pattern is if you're in this upward channel, you eventually break to the downside. I still say, though, you can see we did test back here February 3rd, our support trend line here. So I would say if it does happen to break, you know, maybe you can see there back again the low 34s. But then also if it breaks down and touches this, it could potentially double bottom and then rocket right back up. So in my opinion, I mean, you know, I just drew out these trend lines, not necessarily going to stay in this channel, but even without the trend lines here, I'd say based on the bounce back today, if markets aren't seriously red tomorrow, you could probably see this run up actually another 10%, get back to 45 and retest that 20-day. And then you can see this trend line coming down across. That would be like right there, which would be like 48, maybe like low bottom half of 48. So you could see 45 and then 48. But we have to see what markets want to do. They have been pretty damn volatile, I will say that. We were down big, then we started coming back, and then apparently, as we see in the last moments, we dropped back red. But also you can see that even though the trend lines are key, you can see that the stock is also fighting and trying to bounce. Did have a nice bounce today off of that 50-day moving average there in the low 37s. So you have to keep an eye on that because it looks like, again, you know, even when it closed below it, you can see it went a little bit lower, but then it got back above it. And even here, it came down to test it, technically went a little lower, but got back above it. And here, and here, and even here today, right? Moving average 37.12, low of the day 36.61. So it technically went below the moving average, but then bounced and stayed up. So in my opinion, that's the key level to keep an eye on. A breakdown here to the bottom Bollinger Band 29.5, in my opinion, seems extreme. But if you're building a position, then in my eyes, like I say, if I liked it at 40, I like it even more at 30. MACD was dropping, and we can see the potential curling. And so we could start seeing some momentum now over the next couple of days with this strong bounce. And of course, recent price target upgrade and the news with that, what was it, Eviden, that company. So it looks like we might have the positives outweighing the negatives. And you can see the mid-Bollinger Band is just about 45 as well, which is just about the 20-day moving average. So 45 could be your next stop. We could see another 9-10% rally tomorrow on SMCI. RSI on the daily, middle of the road, perfectly at 50. And on the weekly as well, 49.25 on the RSI. And you can see we came down just about to 35. That's an extreme key level right there. And you can see that we dropped down and had that nice bounce off the mid-Bollinger Band that looks like just about near it, which would be back-to-back weeks. But hopefully it holds that level and then makes its run up back to the high 40s, low 50s. MACD, yeah, steadily, still technically on the up and up there on the weekly. And let's check some pivot points real quick. I'll let you go. But again, SMCI, in my opinion, as we said, this is longer term growth, right? Longer term, but of course, depending on how you play it. If you jumped in some shares at like 35 and, you know, if we see another pop up to like 60, you're going to get out, take the money and run. Of course, very understandable. You know, nobody can really fault you for that because that's still a phenomenal return. You and I both know it. But if you did have the patience to hold it, as we see again, you can see the growth, you know, that can happen over the years, even from this point. We just had the stock split, right? So the stock's nice and cheap again. So that's why I say if the demand is there, if the orders are going to continue to flow in over the next 1, 2, 3 years, we're going to see the revenue jump up to 25, 28 billion and then 40 billion. And again, if that momentum continues, who knows what they're going to say in 2027, right? 54 billion, 62 billion. Who knows how much the revenue is going to chunk up, right? So only time will tell. But based on the current figures that we have here, I still say my $200 personal price target, stands for SMCI. But really good day. I'm sure a lot of you are happy about that. And that's pretty much it. I'll end it there. Once again, Stocks by the Numbers. Thanks for stopping by. Thumbs up, algorithm, all that stuff really helps out the channel. Of course, subscribe to the channel. That's our handshake agreement. But more importantly, moving forward, I understand markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.